Hey everyone, well I thought I'd get live here a little early as Bitcoin is breaking out of all-time highs and we'll see if we get a big move. Definitely order flow suggesting a short squeeze could be incoming. But we'll dive into the charts. We'll take a look at this move, which I am long into. But let's share this link out first. All right. You know, I might actually share this in the other members channel just because not everyone has alerts on all the channels. Live stream starting now. Set this in general. All right. Hopefully everyone's got plenty of time to get in here. All right, so I'm going to share some thoughts here. I'm looking for 81 to 82K if we have a clean break. Lots of positive delta, 115 million volume at the high. So always need to watch for a failed break, but coming in out of this with pretty bullish order flow and a lot of shorts have built up down this range. I gave an update to the members this weekend that after this all-time high rejection and this reaction, really there's no reason to get bearish on Bitcoin here, grinding up into all-time highs on an uptrend. And what I would have liked to see through the weekend would be a sweep of all this local low liquidity for a long setup. Now I can share briefly, but we're gonna have to get back to the charts right away, what that initial idea looked like, and then we're gonna go over to the trading view chart. Just again, bullish on Bitcoin, but really wanting to see a nice clean setup for a long entry. So we won't spend too much time on this. We're gonna come back to the live charts right away. But basically this is on Saturday, just saying, you know, why get bearish here? Order flow still is bullish, even after this rejection. I kind of was leaning bearish after this rejection because I longed up into this and I was taking longs here, taking profits on a failed break, and maybe saying maybe this is a pretty bearish rejection. But on the weekend I said, you know, this really looking at order flow, still bullish. Be nice to see this liquidity sweat. We have a point of control here. Get long locally, use risk management, and why not long into another break of the all-time highs? Which we're going to get into. And let's head over to the trading view, the live chart here, as we have a clean break as of now. But being patient still for longs. I was sleeping when we swept that, so I had to get a little bit of a later entry. But of course the idea coming down into the point of control, we had some local fibs there. Very clean local entry idea. Range over the weekend, we did push up a little higher, come sweep that liquidity and get long into all-time highs, because again, order flow is just bullish. And what I was pointing out over the weekend is the great thing about technical trading is it doesn't matter if price is up here and you're taking longs. If there's clean long setups, you have invalidation into the all-time high pump. Yes, I shorted this wick. I didn't short this one, but I did short this wick. Doesn't necessarily mean I'm high time frame bearish. Just a nice reaction, and there could be one here. If we have a failed breakout, I need to look to take some profits on this long as we wash around here. But we're going to take a, if we have a clean break, 81K here, we can just keep ranging, right? And what would cause that to happen? Well, we have a big squeeze of all the shorts at the top, 147 million volume. Looking for some volatility here, and I'm happy to lock in a little bit of profits. Can always get back in. But this is the major level here. Give me 1 second. Just want to see this read this reaction a little bit. But you gotta be willing to take profits if there's a failed break. I wouldn't be surprised to see just volatility and continuation. I'm not going to close my entire position. We're going to look at a couple things here. But anyways, 147 million, big decrease in open interest. So tons of shorts getting squeezed out here. 38 million delta. Going to be a really reactive level up here. I wouldn't be surprised to see continuation volatility, but do not want to round trip an entire long position back into the range. But let's see how this plays out. You could still consider this having the potential for a breakout, hold some levels, but really need to be wary of this just happening and us continuing to range here. And now, of course, some people will say, well, why take profits if you think we could push up to 81K? Well, for the same reason, I took profits on all of these longs, and I took profits on these longs at the rejection, and I got back into longs. At some point, I'm going to take profits, and then price is just going to keep going. I could have held the whole position. But if we look at it as a set of trades and a principle, this has been a very good the failed breakout, actually long 1, 2, I had a long on this wick as well. I added 3 times into all-time highs. As soon as there was a rejection, I'm taking profits. I actually took the short. Now here, I could take profits and then we continue breaking out, but let's compare it to all the times I used that. I probably lean towards us breaking out, but we'll see. Order flow is, I'm not going to short this. I'm just not. It's too bullish. I've been saying this for probably a couple of weeks now. Just every rejection. Yes, there's been a lot of volatility and some opportunity shorts and add to longs, but just bullish absorption everywhere and aggressive selling. I mean, we can go all the way back down to here. Super bullish order flow into this rally. Super bullish order flow into this rally from 50K. I was long from there, holding longs. I did take profits and take a short at 57.7K. Cut it as soon as we break out, and then longs into this. Took profits, longs, all into this big bullish divergence. Of course, nobody wants to long there. Again, just saying, hey, I'm taking these longs because I don't care where price is. Price is ranging with all the aggressive selling. I'm longing to all-time highs. I'm going to take profits. And in this case, a short. I did not short this. I took one stop on a long in here. And then after this consolidation, just more bullish absorption, long, taking profits, reading the context of order flow after this rejection. Why would I not just get long here again? And so my update literally said, looking for this liquidity from the weekend range to be swept, and maybe another bullish divergence in order flow. Aggressive selling, getting absorbed, CBD making a lower low. Nice trigger to get long into another test of the all-time highs. Lock in some profits, and then assess things after this potential breakout or rejection. So, again, somebody said, it's so annoying. And I'm keeping an eye on things. I have Bitcoin pulled up on a couple charts, and we'll look at order flow here. We could get a really quick rejection, always something to watch out for. Like I said, I think it's not that there's not a valid short here. I'm not going to short it though. So much liquidity being tapped here. Like you have a tight invalidation short, wick stop above the high. I've preferred in this range beyond this short, just taking profits on longs and then adding back on retracements. And just longing again on clean setups. That's how I prefer to deal with this. Seems to me that there's a long way to go eventually for a lot of this liquidity to be tapped that's been building up. We have a bullish divergence against this low at 50K. Just there's been quite a bit of heavy shorting coming into here. So expecting volatility, probably still lean towards higher. And just willing to take profits. And I could have shorted up here on this, but again, I was live then. And I said, I'm just going to take profits on my longs. I'm not going to worry about shorting the all-time high wick because I still could, it just seems like price could push higher, and that's the case. I've been pointing out the BlackRock ETF as well. Just an absurd amount of selling through here getting absorbed. All aggressive selling getting absorbed. So people are shorting Bitcoin. People are selling Bitcoin aggressively. And it's to be expected. We're at all-time highs, but it's getting absorbed. So that's bullish. But somebody on Twitter said, I said I'm bullish on Bitcoin today, and this is when price was down here looking for new all-time highs. And he said, you've been bear posting for a month. I actually haven't. I've been taking way more longs than shorts. I've been pointing out important resistance. And it's going to be interesting if Bitcoin holds this breakout here. But I've been pointing out key resistance. And I've shorted. I mean, I shorted this, but my every update was I'm shorting this as a local range. I shorted, I longed, I shorted, I longed. Super bullish order flow here. And here I said I'm looking for a bigger move up towards 57.7K as key resistance. We wicked off 57.7K. I took a short. Price got about 0.7% above this high, and I said I'm cutting my short. If price doesn't break below this level, I think it's reasonable to look towards all-time highs. Got back long. Anyways, the whole idea is, you know, even here, we're going to get, and this is important because this is how I'm approaching the charts here. I'm not saying I know where price is going to go. Here, I said this is important resistance. I'll take a short if we reject from here. I took a short. Got a 20% rejection. That's a good short. I also got back long when order flow got super bullish here. And so, you know, somebody else said, and I shouldn't feed the trolls too much, but, and by the way, the reason I'm not looking at Bitcoin as we're breaking out here is I'm not longing this. I'm longing from support. I'm going to look to take profits on my longs, but not opening my long here. And I'm not telling anyone what they should do. I'm telling you what I'm doing. I don't like to long in this volatility of the breakout. I think the longs were a little earlier. But somebody said you were shorting 25K on Bitcoin. Well, yeah, I was shorting. I mean, I waited so patiently, and I shorted the top of this wick within 0.2% of the high. This is the daily chart. I also longed 16K. And yeah, I shorted this sweep again, right? But I'm not bearish that price will never go to all-time highs. I'm saying key resistance, if we claim that, probably need to look to 32K. There's probably shorts, there's probably longs in this region. If we break out of that, you probably need to look to 48K as there's no structural resistance. I have those exact same charts. If we break that, you can probably look to all-time highs with a level at 57.7K on the volume profile. We got a reaction there. But the point is, pointing out resistance isn't being bearish. All-time highs is resistance. I could say all-time highs is important resistance. If we break out of it, we're in price discovery. Has it proven to be important resistance? Of course. Has it offered some shorts? Yeah, I mean, we wicked through the all-time highs, had a huge rejection. But just because I'm going to take a short at a key level or a key idea doesn't mean I am overall bearish, and I can still look for longs on key levels. So that being said, I'm bullish on Bitcoin, but if I get presented with new data, I might shift that perspective. Right now, I think we could have a much bigger move that keeps getting shorted maybe. I have some Elliott wave ideas, and it would look something like this. The bearish case, I'm saying, I'm long into this level. The bearish case for me would be that we're putting in a 1, 2, wave 3, and we come in, put in a wave 4, and then run up for a wave 5. Something like that. We're going to look at the levels later after a high comes in. But anyways, getting a push up here. Definitely an interesting moment in time. I still got some decent size running. 147 million, 77 million. I mean, tons of volume coming in here. More shorts starting to get squeezed. But looking for a much bigger pop this time. I mean, this is my gut feeling here because, one, it's not really a gut feeling. It's just based on order flow. I mean, we could start to see hundreds of millions of volume coming in every candle, in theory, right? As people start FOMOing into the move. Obviously, lots of shorts getting squeezed out. Just need to watch to see if there's a rejection here. Yeah, we'll look at some alts. I'm going to talk about some ideas that I have on FET. I'm going to have some fun with FET, which is, you know, I said, give me 3 tries. I'll short the all-time high for a 70% move. Now, of course, I'm willing to take some risk on FET and take some shorts, but I'm going to use risk management. Worst case scenario is I take a stop, right? This Bitcoin long is going to cover all of those stops and more. The Bitcoin longs I took last week. I also was sharing FET long ideas locally this week. So just because I have an interest in taking some shorts does not mean that there aren't long setups. And we'll head over to the FET chart for a moment. I just want to keep an eye on Bitcoin here for a moment, which is this. And I wanted to kind of go over my idea for shorting FET a little bit more, but obviously I'm kind of more interested in Bitcoin at the moment. Here's the FET chart. I shared a long idea for coming in and taking these lows, retesting them. We had some important, it's here on this lower time frame, 15 minutes. Oh, it's not going to actually show up on this chart. Into this key structure. This was a long idea. And even this weekend, I said, you know what would be an interesting long on FET? I have some new analysis here. This is in the Discord. Looking for some of these lows to be taken. I mean, why not long it up into here? Probably take some profits. We have a descending structure too. But I'm going to be watching this level up here. I don't think it's very wise to look to short the wick of this. If we get it, I'm probably going to do it just for the memes of shorting the all-time high. Do I think FET could break out much higher? Absolutely. I just cut my short, take a loss. I said I get 3 tries, and if I lose all 3, I'll take 3 hours of stops. I think a more reasonable trigger would be to wait for more weakness and short a lower high on a failed break here, and that trade could also be confined into this area of the chart for initial TPs, remove the risk. But I'm going to watch this. I have something called a predictive fib up here. It's one of the few tools, there's probably 2 tools, that I would use to quote-unquote predict an all-time high, or a major high, let's say. Not even all-time, just before a major retracement. I'll review that briefly. This is not a tool that I would use typically alone. I have some local structures here to look at as well. But basically, you take the low to an imaginary high. So you pull it up into the chart and you make this 618 exactly, this pivot. It's on the logarithmic chart. And if price rejects from here, that becomes our 618 perfectly. So I'm watching this quote-unquote predictive fib level. I'm just giving you my technical confluences for trying a short up here. If I get a reaction, if price just blasts through it, I'm not going to short it. It's also our 1618 of the range. That's this level here. Be a 1618 of this breakout, of this structure is in that region. So a couple other fibs, and then we have this ascending structure that may get play. I accidentally moved this. That may get play, but need to look at how that might develop. But anyways, if all this there's all this confluence, I'll put on a little bit of risk to short FET there. I think the more intentional or reasonable thing to do would be to wait for some of this structure to break down. But anyways, let's get back to Bitcoin for now. Again, happy to have longs into this. I don't know. Definitely was waiting for these lows to be taken. I could have missed this long over the weekend. I try not to take too many positions over the weekend. I might take hedges. I might take the occasional trade during the weekly close, but here, I was looking for these lows to be taken into that point of control. Oh, I'm on the wrong chart here. And this region down here and this liquidity to be grabbed before another move up. And we started rallying. I said, hey, I'm just going to wait. I'm not going to long into this. If I miss it, I miss it. But I'd like to see this liquidity taken maybe into the week. And we got a nice reaction there. So again, no reason to be bearish here on Bitcoin. One, the structure's not bearish. It's just grinding up. Yes, we've had some reactions. And order flow's been giga bullish, which I've been also just saying on Twitter day after day after day. I'll read some comments here in a second, but let's this order flow could get very interesting. I'd really like to see a big pop up into that 81, 80K region. I may pull I have a limit TP there. I may pull it depending on how price is approaching that level. But what I don't want to do is, I would rather just get filled on a TP in this case than have, the price resting up there for a moment and then having like a 10% rejection. Because I can always get back long if there's a reason to. Okay, let me read some comments here just to see if there's someone saying, you are the goat. The goat. How do you read order flow? Well, I have some educational content I talk about every day in the Discord. Order flow is a big part of how I make decisions, particularly on Bitcoin. And now we have some new order flow data from the BlackRock ETF, which I think has proven to be very interesting. I even had the idea maybe of, I mentioned this at the end of my video, just kind of like a loose theory of what's the dynamic going to be between the BlackRock ETF and the Bitcoin price over weekends. And you have this big rejection. You have heavy selling of Bitcoin. BlackRock is going to be gapping up here. And so a ton of people sidelined over the weekend who are trading the BlackRock ETF. And so you can see a ton of FOMO into the open. As bullish as the BlackRock ETF has been, people have just been aggressively selling this. This is this blue line here of selling, market selling, with limit buying just coming in and sucking up all of that liquidity. So bigger traders, institutional traders, and of course, we don't necessarily know because we have so little BlackRock data if this data should be interpreted this way because we can't backtest it very far. But in theory, these concepts would just apply exactly the same way. And in theory, this should even be better data than some of these other exchanges like Bybit, for example. But both are showing bullish absorption. This data should be reliable. And so it'll be interesting to see what happens in the market open, of course. But yeah. Reading order flow, there's not a one sentence answer. I have a lot of content on order flow, and there's subjectivity to it to a degree, but there's some really strong concepts, which is CBD showing aggressive selling, right? That's market selling. And you can infer where big traders are coming in and sucking up all that liquidity with limit orders. Not every bullish sign of bullish absorption plays out, but what we're seeing here over and over again is probably the average retail trader, because they're trading with market orders, are just aggressively market selling and shorting into all these little ranges, and it's just all getting absorbed. So this is the aggressive selling. You can just see selling, price going down. But hey, look at price. It's holding up. So to visualize this, you'd say, this is a telltale sign that there's some big traders sitting here, maybe some institutional trading, absorbing all of this buying pressure with limit orders. They just have limit buying sitting here. People are selling into it like mad. They're just taking all that liquidity and then price pumps. Same thing with here. Taking all that liquidity. Price is grinding up into heavy market selling. That is bullish. There's no other way to put it. It's super annoying too. I'll explain to somebody. It's not an opinion. It is bullish. This is bullish. It doesn't mean price has to go up. It's a very high probability way to see what price is doing in the range. Again, bullish, 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 bullish. But price will go down, and somebody will say, "Oh, I thought it was bullish." I don't know. I've had too many conversations about order flow. Bullish, 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 bullish. I don't know. It is bullish. It's not an opinion. I'm not saying price will go up. I'm saying aggressive selling is getting absorbed. So take that as you will. I'm not saying price will certainly go up. That's why I use stop losses and I use risk management. I'm just looking to get into high probability trades. So that said, I'm going to probably be giving updates over the coming days and weeks. Maybe we'll see some bearish absorption forming up above. I'm going to point it out. Does that mean price can't go higher? No. But I'm not going to turn my blinders on. If I start seeing super bearish stuff in order flow, I'm going to identify it, and I'm probably going to structure some trades around it. And those could be shorts. Does that mean that I don't think Bitcoin can go higher? No. I'm just interpreting the data to the best of my ability. I ended this live stream by saying I think a rejection from here, I probably lean bearish. We have a rejection, a reaction, and then I'm taking a look at this with fresh eyes the next day on the Saturday, and I'm like, you know what? Yeah, we could range here, probably look for some liquidity, but how can you really justify calling this bearish if you're taking an honest look at the data? So that might continue to be the trend here on Bitcoin. Probably, I think a lot of people are looking for 71, 72K. I have some levels there as well, and it's probably worth watching. But it kind of makes more sense, in my view, to push up higher. But we do need to look at these levels as well. But yeah, look at this. I mean, just decrease in open interest. Tons of shorts getting wrecked. 38.6 million delta, 10.9, 17.1. We can still reject here. Of course, anything can happen. But the way I'm playing this is if price is trading up here, I'm not going to short, maybe look for some structure up here. I have levels up at 81, 82K. Maybe we form a range up here. Maybe there's some bear signs and can change perspective, but don't have any of that data yet. Someone's saying, any alts? We get new buying opportunity in future or not? What about BNB? Well, I mean, it depends on the time frame, right? Like, it's a buying opportunity if you structure your trade well to buy Bitcoin here. People wouldn't maybe say that, but the reason it's a buying opportunity is I'm not going to take a Bitcoin long and then hold it to 10K. If I took this long, my invalidation is local. So I can size it decently big. Same with these. I can take some size into here. My invalidation's all local. If price breaks down, I'll just stop out my trade. And inevitably, somebody will say, and maybe this happened instead. Price broke this down and flipped this point of control. And I take a short here. And I say, I'm shorting Bitcoin. Structure's breaking down. The structure I was longing is breaking down. They'll say, you were long all-time highs and now you're bearish. Lol. Right? That's the kind of thing you get. But it's like, well, I'm trading the information I have in front of me. I'm not saying I'm going to win every trade. Again, same. I was longing all of this up into this. I was longing this. And I'm long into this. And those might not work, right? And so I just stopped them out. I'm not going to hold it if price goes down to $50,000. It's all local because everything's bullish locally. So why would I invalidate my trade way down here? But yeah, we'll look at some alts. Of course there's going to be opportunities. I mean, does everyone think the market is just going to... I mean, it seems so. They just think that price actually will. Everything will just go up 10, 20, 30, 40, 50x. There will never be a retracement again. I'm not of that view. For example, I showed this on FTM. Probably need to go here. If I was to gauge what this looks like to me on FTM, this looks corrective. This actually doesn't look... There are bullish counts here. Well, just looking at this on logarithmic with a fresh perspective, or this unbiased perspective with an Elliott wave count. And of course, people will say, I mean, people do say, like a guy comments, You're getting bearish at the wrong time. You're going to lose all your followers. How is it the wrong time, which again, this target still is 60% away, 70% away on FTM. I was looking for longs here on FTM at 16, 20 cents. I got slightly front run. I took swing longs here. I still have some of this running, but I took profits on it. Of course, in this market, taking any profits, of course, always feels like a bad idea in hindsight. But do you think it's a bad time to get bullish down here and on these retracements, and a good time to get bullish up here after a 600% move? Or is it a good time to maybe be looking for really important ideas? This might not play out, but I'm sure as hell going to be watching price up here for a wave C down into a big ABC correction, because this looks corrective. 1, 2, 3, 3 waves, ABC correction. 1, 2, 3, 3 waves. It looks corrective. If it's bullish, then the accounts go way up here, which is fine too. I'm not saying I'm just going to randomly short FTM here. I'd probably also be looking into internal structures on retracements to long up into this level, and might get some, 100% rally longs. So people get really offended if you share resistance, but people get offended when you share support. I mean, the same comments. If I'm looking for longs at the lows in the quote unquote bear market, the comments will be, you used to be good, we're in a bear market and you're just sharing long ideas. Price isn't going to go up. We're in a bear market. And it's just the inverse at the highs. You just always are thinking price could go down. We're in a bull market. It's just getting started. Everything's only up 800% in 2 days. We're not going to retrace. So I don't care what people do. If you don't want to use risk management, you don't want to have levels you trade around, you don't want to have invalidation, you want to hold your bag until it goes to zero if all structure is breaking down, because up only is your only perspective on the market, that's fine. I choose to trade around key levels. If there's signs of strength, I can look for longs. If there's signs of weakness, I can look for shorts, and I'm okay to take stops. ETH also just pings so nicely up off of this level, testing all-time highs. So we're going to need to look at, and FET could break out of this as well. There's some high time frame. I'll just touch on this really quickly. We're kind of wicking through it. So there's a really high time frame log scale here on the daily chart as well. I have 2 FET charts. We're kind of wicking around this level, but it actually is confluence for me for a potential major high to come in. I'm not saying it will. If we break out of this, that's pretty bullish. But it's a level I'm watching. That's what I would say. So, I mean, there's also a big log scale up here, a log scale channel, and this is around $9-10. So if we break out of this, I mean, I'm probably looking for these as new highs. I'm not going to short. I'm going to short with like a 1.5-2% stop loss. I'm not going to be short from $3 to $9, right? This is pretty interesting. We're sustaining some of this local price action here. This is the 15-minute chart. 147 million volume, 99 million, 112 million. Getting reactions, but still holding up some of this structure as we squeeze out all these shorts. Which, I'll be honest, I took profits on my long on this, but one of the reasons I didn't short this is it looked kind of similar to me. As we pushed up into these highs, 42 mil, and the delta wasn't that high at these highs. It was about the same as this, but I could have seen this just kind of sustaining, chopping around, and continuing up, which is why I didn't short this high volume up here, which would have been a good short at the time the other day. But then I think price was up here for like 15 seconds and then just went straight down. And that could happen now. That's what I'm wary of. Like, I don't want to round trip my longs, which I had the same plan here and I didn't round trip my longs. But right now we're building some structure up here, holding the breakout, and I'm just looking for higher. I don't even want to try to short this. If I get local structure and some local bearish absorption, I might try. But for now, as a hedge even. I'll share, you know, for FTM, I didn't finish this point. Which, yeah, I mean, I did long that, where's this? I did long here on FTM on the daily chart. I just did not, I closed a lot of it here. I got stopped out. I have a very small percentage of it running, and it just rallied to this level, so is what it is. I like to trade alts more as swings, like looking for the high time frame levels. It's the same, but again, taking profits. I was going to take profits, look for higher low, and then add back to my swings, and that didn't really work out there. But I took the exact same long setup on Phil as I did. This was my long setup. It's the point of control, local GP. If we pull all the levels, it's the exact same long setup as I took on FTM. So I had this long setup for here, waited many days to take this long, planning on taking a swing long there. And price has just been stronger than it is. So again, not a perma bull. I just like the long support. I'm not just going to FOMO into longs at the top of this move. I do have some ideas of where longs could be nice if we get a big retracement. And I'm not saying we will get a big retracement. It's just if we do, I'm going to be willing to take longs into this region, coming and filling these wicks. There's 2 wicks that I want to see potentially filled. I'm going to gauge a reaction around there, maybe try both longs. But that would be internally a wave 1, 2, 3, 4 in the wave C, and then looking for the wave 5 up into this $1 region. So that's the long I'm interested in. Whether or not I get it, I have no idea, right? But I have alert set down there. I'll take it if I get it. And that's the way I like to trade or make decisions, is I'm analyzing key levels before moves happen, and I'm looking at and I'm not to say there aren't other trades within this structure, right? Like you could take, but I'm analyzing, hey, this would be a nice long. Of course nobody wants to take a long there, but I have all the reasons I think it'd be nice, willing to put on some risk, nice chance to get into a swing position. And that's the same thing I did on Mexc, which I got trailed out of 70% of my swing, which is actually what happened to me on FTM. Doesn't matter. I'll find another position. But I longed Mexc down here. Very similar setup. This is a setup I use all the time. Come and take these range lows on the daily chart. Enter my long here. My target, this monthly candle, 70% away. Swing target, and yes, I've taken profits, and it might keep going. I can always look for new entries. But the annoying thing is people will flame you for longing here. They'll flame you for taking profits up here. They'll flame you for having any ideas of a potential rejection when you're in a long from 70% lower and you need to start making some decisions. If you're going to take profits, head short, what are you going to do? And people are buying up here and saying that you're a bear. But it's like, no, you're just an idiot because you didn't want to buy anything down here. And now that everything's up 400%, well, many people are taking profits on their swing longs. You're calling everybody a perma bear. All right. This is, again, look at, oh my goodness, look at this open interest. It's just amazing. I get this is, I mean, just shorts getting obliterated here. I did point this out on Twitter. If you go to my feed just before this big rally, that shorts probably setting up to get squeezed here. And I said this is earlier before the breakout here, as price was kind of rallying around 69K, just worth noting open interest into this bullish order flow, likely a lot of shorts to squeeze out. Because look at this open interest, this cumulative volume delta. I mean, people just shorting this like crazy. And here we are, just wrecking all of these shorts. But does it make sense to everybody here that all of us have a bias, right? We have biases and we try to overcome those. There's no way to even know all of your internal bias. And I'm not going to say bias doesn't influence my trading as well, but as much as possible, we want to be data driven, not emotional. You know, it would have been, I think, probably more of an emotional perspective of rejections at all-time highs to say, this is all bearish, look at these rejections, when you look at the context of this uptrend and this order flow. The data-driven approach would be to be bullish here, even though we've had rejections from all-time highs. And you can look for signs of strength and look for technical levels. And I probably have a bit of a bias around 81, 82K, but I'm going to try my best to interpret what's actually happening there. So I have some ideas, but let's not just assume what's going to happen there. Even this, let's not assume we'll bounce off the point of control, but let's look at how much liquidity is under here. Oh, 107 million volume wick to 28 million delta. That's a pretty nice local liquidity grab. Oh, that's a nice reaction. This is some nice bullish order flow. Okay, well, my idea was to come in and take this liquidity after the weekend. We didn't just nuke this level, so maybe this idea was good, right? And maybe it's, you know, you have the idea, you have to have it, have some vision for the chart, and then execute, use risk management. I hedged short my Matic long, and for about 0.7% of that 80% move, instead of closing it, and I took a stop on my head short. Willing to carry the swing. Someone's saying Bitcoin may be rejecting now. I mean, yeah, look at it. It might be, and we'll have to keep an eye on this. Like I said, I'm not so interested in just shorting this, and we'll look for signs of weakness that, like, I think might be compelling. But I'm not going to short this. But tons of liquidity being tapped. There's no doubt about that. And there's probably a lot of big traders selling into this, with limit selling, getting that using up that liquidity. I wouldn't be surprised to see another big retracement if we do get continuation. But yeah, I mean, this is the most, you could call it the most liquidity we've tapped to the upside in a long time, at least on Bybit here. But it'll be interesting to see when the BlackRock ETF opens up, what's going on. Someone's saying, what's this chart platform? It's ExoCharts. It's an order flow program. FTM top for this bull market, question mark. I mean, that's not how I analyze the market. I'm not really calling it top. If I short a level, the idea is I'm shorting a level that has a high probability to be get a reaction and be major resistance. And if it breaks out, I'll cut my short. If I get a nice move, I'll probably take profits off that short. But yeah, I mean, some of these trades that I pointed out earlier are such good examples. I'm going to pop over to the trading view chart too. I'd actually rather look at Bitcoin here. I have just really simple levels pulled right now. But like, for example, I wanted to short this level. I had like 20 confluences here. I had harmonics, I had channels, I had all these things, and they got front run, and I was just waiting, and literally to the day, waiting for this level to be shorted, and shorted it right here, like in that moment. My updates were preparing to short this level, been waiting for it. Now, I could look like an idiot shorting this, right? And then price just goes straight up. It's just a level I want to short. I want to try to short it precisely. I want to limit my risk here. And I get paid 12 to 1, 13 to 1 if it works, and I get a stop if it doesn't, right? And then I take my next short. If it wins, I get $18 for every dollar I risk. But what people will do is they'll just look at your last trade. So let's just say I short this and I make $18 for every dollar I risk. I short this and maybe I make $10 for every dollar I risk. Just give me an example. And then I short it again and they'll say, you idiot, you shorted 25K and prices at all-time highs. Yeah, I took a short. I took a loss. Though that same principle also got me into some great winning shorts, great winning longs. And yeah, but people will just remember you saying that 25K is important resistance and now price is at all-time highs. They'll remember you saying 48K is important resistance. Well, what does important mean? Does it mean price will reject here? No, it means it's important if price is rejecting from here, and it's important if price is claiming it. That's it. If price claims important resistance, that shouldn't be, you should be considerate of that, right? That's what important means. There's tons of irrelevant levels on the chart, right? There's lots of places where people might say, you know, if price holds a daily candle, closes a daily candle above this high, that's super bullish all-time highs. I wouldn't view it that way. I mean, I would view these major structures as the important ideas, and I can say I can short this until it breaks. I can short this till it breaks. You can long reclaims, and it's just the same thing as this range, right? I can long this local range until it breaks. Even in the Discord, here I was in these longs, and I just said, order flow's bullish. I'm holding these longs. I'm willing to take a stop. If price breaks down, I'll just look to long lower levels, but I'll just take the stop. I'd rather just hold the longs. But I also took shorts, saying, hey, I'm just going to look at this as a local range. I'll short the highs, long the lows. And I was able to fade this short. This was super bullish impulse because order flow just got so bullish here. I just hold the longs. But the problem is people want to take, say, an update. And you say, I'm long here with the stop under the lows. They want to take that to go all in, 10x leverage, or whatever it is. And if price breaks down, they're not going to cut. And they're going to say, you were bullish. Yeah, if this range holds, I'm going to take a tight invalidation along this range. But anyways, I'm not going to lament too much. Just got like 3 really annoying comments when all you've been doing is bear posting. Literally all I've been doing on Bitcoin is longing. I took, I think, 1 short here, which we had a huge rejection, but I was longing, taking profits, winning, longing. Yes, I took a stop on a short, but way more longs. We need to look for a big pop up into this liquidity up above as a possibility. But again, why be shorting this? Price is trading above the all-time highs. Yes, there could be a major rejection, and it's even grinding up. Little liquidity wipes here. Some nice little volume even in that, but actually, funny enough, that is our highest volume candle on the 5-minute. This little wick, 50 million. Or no, we had an 84 million here. But the other thing is I like to short resistance, which can look like I'm shorting just the top of any rally. And sometimes it does look like that because the trade doesn't work. But it's around key ideas and key levels, right? So this should be very clear that we got to start forming a local range here. I'm not going to short that. But this should be really clear. There's a big difference between taking this short, wicking through this high and rejecting, or even shorting the top of this initial test where we rejected, which is price wicked up through the level, giving you a really quick reaction, super tight invalidation, and structure to trade around. That's very different than just shorting this, right? Price is breaking out and just grinding up, and you have no structure up here. So why would you, shorting this wick is not the same as shorting every little wick up here as price trades above all-time highs. Yeah, I've looked at that. So I kind of went over the predictive fib level on, actually I want to put this on the chart again as well. I went over the predictive fib level on FET. There's kind of an idea similarly here. There's so much confluence here on 81, 82K. Which is, if you pull this from here to the imaginary high, this pivot is our GP. You'd be shocked at how often that becomes a relevant idea. So here's a perfect example. This all-time high, you pull from this low to this high, and make this the 618 retracement. Just make it the 618 retracement. So you could have pulled this into an invisible level before the high comes in, and it's the exact top, right? This is happening all throughout this range. There's a major 382 in here that had the same idea. Forget which one it is, but there's predictive fibs all in here. I don't actually recall the levels, but I know there. Oh, maybe this was the 382. Yeah. So also makes this the 382. I think it's a little bit cleaner on other charts. But anyways, I'm not saying it's the primary way you should do analysis, but it's an important idea, and it's actually surprisingly reliable on big impulses. But not just that, predictive fib, the 1.237, the 1618, all these levels coinciding right in here. And so I'm watching it. That's it. I'm going to watch price there. It doesn't even mean I have to short it. It just is a level I'm watching. That's why I do analysis. That's why I take the time to do it. That's why I study 100 years of backtesting of price action on tons of assets, so I can get an idea of how assets move. And spoiler, they all move very similarly. It doesn't really matter what it is. It doesn't matter if it was 100 years ago or today, but they have relative price movements. That's why you don't say this asset went up 10% a year ago and maybe this will go up 10%. You always do your analysis relative to the price action of the asset that you're doing analysis on. So probably could look for the possibility of some little local liquidity ranging, grabbing here, but still price grinding up. I just got my favorite question, which is, do you hold spot or do you only trade? Well, the question comes with a lot of bias, right? What about having a spot position isn't a trade? Let's define a trade. I want to buy Bitcoin. I'm assuming, unless you're using it as primarily just your currency. For example, if you have a ton of US dollars in your bank account, you're technically in a currency trade, but that might not be the primary reason you're holding the dollars. But most people, I want to buy Bitcoin here because I believe it will go up higher so I can sell it, right? And then you take on risk. You might put your life savings into Bitcoin in spot. You might buy $1 million of Bitcoin, $1,000 of Bitcoin, whatever it is. And then what people will conflate with not trading is, well, I just don't have any invalidation and I don't have a stop loss and I have no plan for being wrong and no plan to manage my risk. And so, for example, somebody says, somebody buys $1 million of Bitcoin at the all-time highs back in 2021. They say, well, I'm not a trader, I'm just investing. It's an investment. Well, if I bought $1 million of Bitcoin here and then held it through a 78% drawdown versus I took $1 million trade with no invalidation, I lose the same amount of money. So a trade for me is the exact same thing as an investment or holding spot. It's just people think if you have no plan for being wrong or no plan to manage your risk at all, it's suddenly not a trade. It's just a trade without any defined risk. And the bias in the question is, well, there's no risk because you just hold and it will go up. Well, then you just have a strong conviction or bias that the thing you bought, whether it's Bitcoin, Matic, FET, Pepe, or Poopy Coin, that you can just buy it, and if you just hold it, it's not a trade. It's an investment that will go higher, and you can always sell it higher than you bought it. Unfortunately, that's not always the case. But as a trader, you don't really want to sit on all your capital tied up in a trade here with an 80% drawdown, right? Why would I do that? So I wouldn't say, you know what, I'm not going to take responsibility for my risk, and I'm just going to buy a bunch of spot here and just hold it no matter what happens, because I don't want to manage a trade. I could take a swing trade with risk invalidation way down here. I could do whatever I want. But why would I suddenly just make the random decision? It's like being long here to have no plan to get out of this trade if it's not working. The same way you might have no plan to get out if this trade isn't working because I bought spot. Whether I have $1 million position in spot that goes to zero or goes back to 16K, or I have $1 million trade, I lose the same amount of money. So the whole point is, for me, holding spot doesn't make it not a trade. It just is a trade. $1 million position is $1 million position. Where you buy is where you buy. Where you sell is where you sell. Where you cut the position at a loss is where you cut it. If you don't cut it, you don't cut it, and you go into drawdown. But so like people, yeah, I mean, if I say I open $1 million trade here and I have a stop under here, or I open $1 million trade here and I just don't have a stop, I mean, the only difference is I have not defined my risk. Somebody's asking what are my thoughts about charts having different information, which is depending on the exchange and the pairing, like Bybit, Binance, based on Wix. Wix can come in at different lows. It could be dependent on if you're on the BTC USD perps or USDT. Sometimes USDT also detethers from the dollar, which creates weird levels comparing the charts. I choose charts that I think are consistently reliable technically, and one of those is this chart, but it's never going to be a perfect science, right? So I'm always charting on the charts I think are the most reliable regardless of where I'm trading. And I'm typically executing my trades with market orders, and so yes, there's going to be some discrepancies sometimes with the levels, but I mean that's just the name of the game. But yeah, I also hope it makes sense. You know, there's going to be a lot of people that tune in for this here and they're like, should I long? Should I long? It's just, I'm not saying you can set up a long however you want, but I prefer to take my longs at support, be long from down here. And of course, if I say I see weakness at 81K, I might be selling up here, right? And people will say I'm a perma bear, but I don't really care. I'd rather just make money. And I've said this so many times up near the all-time highs here. I think I did a live stream in here where somebody was saying, you know, they thought 61K was going to be the top. They sold everything, and now they're feeling massive FOMO. How do they deal with that? And I said, you know, I don't know their level of skill or what their competency is for trading, for example. But just get in on a new entry with invalidation. It doesn't matter if I've longed here and I've closed my entire long up here. I can get long again. There's new long ideas. There's new long ideas in here. There's new long ideas in here. If I sell at 81K, maybe I get a better entry and there's a new long idea here and I get back into the trade. Maybe there's not, and maybe I close my trade and this happens. Well, I can still get long off of a new reasonable idea. And I'd rather just navigate the market than take no responsibility for my positions. Kevin's saying, is good short now? I'm not shorting. But, like, I'm not going to tell you what to do. You do whatever you want. I can explain what I'm doing and why I'm doing it, but I could say I'm not shorting this, and price could go straight to zero from here, and maybe you have some idea. I mean, for example, somebody maybe has an idea. They want to short this as a range, you know, tight invalidation, try a short here, take profits into these lows, and then try to hold the rest as a swing, as a hedge. I'm not going to say that's a crazy thing to do. I mean, you can do whatever you want. The thing that's really important too is what makes a trade good, right? Like, is it a good short here? Well, I mean, maybe the only thing we have here is local structure. We're breaking out into all-time highs, grinding up into it. If you want to get into the 1 minute chart, well, you have some pretty tight invalidation as price maybe forms a range here. You're trading against a high time frame breakout, which could be a bad short, but you're trading on the 1 minute time frame. You might get a lot of slippage if we do break out here. But structured this way, it's not the craziest short, and you're taking profits into the idea of a retest, and you're scalping, right? And maybe carrying some on a breakdown, taking profits, removing your risk, or just stopping out the trade. You get 5-to-1 odds to take this trade, for example. So that's much different than saying it is good to short Bitcoin here and just have no invalidation and no setup and just short and hold it until you either get liquidated or are in profit. That's a bad short. I'm not taking this scalp short, by the way, but the point is, a good trade has 3 components: the technical entry idea, invalidation, and then your targets. And that's how you holistically create a risk reward scenario and how you can size your position. You could say, oh, I'll risk 0.5% here to take a short into this level. I get 3-to-1 odds, looking for some volatility, liquidity to be wiped out. Reasonable, right? Yeah. Which folder is my channels in? It's gonna pop up in one of these. Or did I delete it? No. I had a channel and I had deleted it and then I dropped it into a random folder. I haven't looked in the Discord yet, but I'm assuming you guys are talking about. We have to re-pull this structure. I think there's 2 ideas here for channels. This is close. I'm just going, I might tune it back in a little bit, but I know this channel's up here. Maybe that's the channel you guys are talking about. Oh, you're talking about the channel on the 4-hour. I see. Yeah. There is a high time frame channel here. I'm aware of that. But you're talking about this channel. Just want to see where that center line is. This something like this. But this is kind of interesting too. If you take this, it actually is the pico top of the move. If you, this trend angle, wick, 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 there's that as well. But again, you know, people are pointing out a channel here. Okay, well, there's a channel, there's some confluence. Personally, I'm not going to short the breakout here. I'm not saying there aren't shorts, because, you know, if you want to look for some local structure to form and look for some local short setups, I just kind of explained all of that, right? This is going to make more sense to people in the Discord, of course, because these are technical ideas that you can use on low time frames. But I'm choosing to look at this as bullish structure for now and more trading as a swing, not saying there aren't scalps here. I mean, if we see something ridiculous come in that gets absorbed in order flow, then yeah, maybe that would be so Kevin, the way I like to approach the markets is have well-defined ideas with risk management that, and I don't think anyone should trade an idea they don't understand. It's really hard to manage a trade you don't understand. So you're asking, is good to short now? Should I buy puts? It's like, what do you want me to say? That's not the answer to that question. Would yes, no, depends what your plan is. I can say when and why I would be shorting. And personally, I'm not shorting here, and price could go straight down, so do what you want. I would way rather just people take some initiative to learn some of these concepts. And, you know, the reason I give live updates, especially in the Discord, is I have all this educational content that you can learn all this stuff, and I do live market updates to show examples of it, right? So all the order flow updates, people get really confused with order flow, especially when they're first time going through some of the educational content. Well, I'm giving order flow updates every day. I'm talking about where I would personally be interested in longs and why, or shorts and why, and how I'm interpreting order flow and why, just to kind of drill these ideas through, but going through a lot of effort to teach the idea and not just say long here, short here, without any understanding of what the trade structure is and why it's a trade. And I lose trades too. You know, people think, not lead people to believe it's magic or anything. It's just probabilistic thinking. Even the idea that you take low probability trades, and that's reasonable if they're high enough risk reward. So anyways, let me go through. There's a lot of comments here I haven't read. Do you think New York traders will be cowards with overcooked spaghetti for fingers again? I have no idea. but I like the way you phrased it. I mean, there's going to be, I think the BlackRock ETF will be interesting. I mean, all the markets that are close will be interesting. There's going to be a ton of people sidelined. That might be the catalyst we need. I'm not saying it will be, but to start pushing us into that 80K region towards the New York Open. And I could see a lot of people getting trapped up there, just like, okay, we need to buy I need to get long. Bitcoin going to 100K, Bitcoin going to 1 million. And if we have some nice structure up there, that's where I'd be interested in framing some shorts. And of course, I don't know what's going to happen up there. I'll be using risk management, and I'll have been long into this rally. The other thing that, is important to realize, yes, you might not always take profits at the top, but what do you think is better? To have longed here, round trip, long here, round trip, longed here, and maybe hold a breakout, or long took profits, long take profits, long take profits, long take profits, and just keep adding back to the position on retracements. And at some point, you're going to long take profits, and price is going to keep going up, or you're going to hedge short, and you're not going to get a TP1, and price is going to go through your stop. But if you center the risk reward well, it really doesn't matter what the outcome of individual trades are. You're looking at the performance of making those types of decisions over large sets of trades. If you have something, say, mechanical, that every time you do it, every time something happens, you do this thing, and you don't make a personal decision, you make a data-driven decision, and if you do that, you're winning way more than you're losing, and the chart makes the decision for you. That's the idea of approaching things mechanically. If I get this, I long. If I get this, I short. If I get this, I long. If this happens, I stop out. If this happens, I stop out. If this happens, I take profits. And you just rinse and repeat that into the market constantly on different time frames. You don't have to be trading the 5-minute time frame. You can do that on the daily chart. You can do that on the weekly chart. But I'm just preparing for, my thesis is a push up to 81, 82K. I probably will be looking for shorts up there and preparing for and taking profits off these longs, and people will be calling me a perma bear, but that's okay. I'm not gonna let everybody else's FOMO dictate how I trade. Or apparently, I mean, somebody said to me the other day that do I think that Bitcoin won't go up? This was on a live stream, I think, to all-time highs because the sentiment's so bullish. Everyone thinks Bitcoin's going to 100K, and so do I think that because everyone's so bullish that price will just go down? I said, well, sentiment's really hard to gauge because people might be saying they're bullish. They're saying, but they might be selling, right, or shorting. And order flow tells the story. So there's also people who are bearish. There's bear sentiment. There's bullish sentiment. Your bias might be saying everyone is so bullish, everyone's so bullish, so I want to sell or short. But everyone might be thinking that to themselves. And order flow tells what people are actually doing. And what people have actually been doing is what I'm more interested in than what they say they're doing on Twitter. And what people have been doing is just selling and shorting into this whole uptrend, into here. Everybody's expecting, I suppose, a big rejection, not a breakout, because retail, presumably based on order flow, has just been selling and shorting. So I'm more interested in that data than I am in trying to gauge the sentiment on Twitter. Okay, I'm reading some comments here. If you're interested in this stuff, listen, I'm a little biased. People always ask, where can I learn about order flow? Where can I learn to do this? I think the LATF, that's the Lucky Apes Trading Floor, link is in the description, is a great place to learn this stuff. I mean, I put in a shit ton of work to explain these concepts in the market every single day with a lot of context which is auxiliary to all of the educational content that you can go through, watch the videos. That's the best way to start. You have a big long list of videos, but the videos are nice and short, 15, 20 minutes, covering individual concepts. And then I utilize those in the market and try to bring it all together. So to accelerate that learning curve, because it's one thing to watch a video on order flow and be like, oh, okay, that makes sense. But then be completely confused when you're actually seeing what's I thought it was bullish. Why is this happening? But when you have the context of, hey, I'm looking for price. Order flow is bullish. I'm looking for price to come in and wipe out some of this liquidity for a move up to the upside with another bullish divergence. So instead of, you have that context of why this makes sense to come in and run this liquidity, even though this is bullish, and waiting for that rather than getting stopped out. And anyways, it's much harder to read live if you don't have a ton of experience, and that's why I make daily updates. And I'm not saying, I'm usually right about the context of order flow, but order flow is not magic. It doesn't tell you exactly where price will go, but used with high probability levels and good interpretation of order flow can get you pretty darn close a lot of times. And when you're wrong, you just want to get out of your trade and use reasonable risk. Yeah, order flows in everything. There's order flow concepts for stocks. Let me see if I can pull. So yeah, I have some order flow from different data feeds. So I share some of this in the Discord sometimes. You have to pay a couple grand a year for some of this order flow data for stocks and commodities and different things like that. But it's a lot cheaper to get it from crypto exchanges. But we'll look at, I'll just show an example of order flow on Tesla here. So I shared some ideas for Tesla. Let me go here. Order flow's been bearish on Tesla, for example. Where the flippity flappity? All right. So here, this was back about 11 days ago. Just sharing bearish order flow here on Tesla. Bearish order flow. All this buying is getting absorbed. And I shared an idea of coming up, rejecting from these local highs, coming and sweeping these lows. These are high time frame ideas. This would be like a 70% move, and then coming in long in $65. Okay, but I'm just showing order flow context into this is bearish. It's the exact same principle. Let me just go here for a second. It's the exact same principle as we're looking at on Bitcoin, which is, this is up here, right? Order flow is bearish. Come up, we have a nice 382 here, SR flip. Literally, I could chart you Tesla, and I know the chart pretty well. It doesn't look identical to Bitcoin. It is. Structurally, it's identical. All the exact same highs and lows structurally relative to its own price structure, right? So the chart doesn't look the same, but it is. And then all these order flow concepts are just as applicable, with big bearish divergences forming here as we range at these highs. What does that mean? Limit selling into aggressive market buying. Limit selling gets wiped out, and there's some nice levels below. So anyways, that is that's order flow. That's order flow in the stocks. It's just market buying and selling versus limit buying and selling. Looking for the big traders. You're looking for where big traders are positioning themselves short, which is up here, and where they'll start positioning themselves long. But of course, the important thing for everyone to realize is I lose trades, right? I just keep my losses small. And so it can look like, oh, wow, you know what the market's going to do. You were just right 5 times in a row. And then people start to think that there's some kind of magic happening when the next trade just might not work, which is why you take reasonable risk, right? You don't want to win 5 trades in a row and then on the one trade you lose everything. No, there's no discounts to join the LATF. I don't know. I mean, it's kind of hard to know about the price. Like, I've had people, I look at it like this, and maybe this is sort of a, I don't know, maybe it's an unfair perspective. It's the cost of a coffee a day, right? Like a Starbucks coffee. To have all that content, be part of that community, and have all the live updates, that's the investment. That seems reasonable to me. But I mean, there are people who have told me, hey, I've lost $1 million in the last 9 months. Nothing I'm doing is working. I only have 300 grand left. Can I get a free trial for 3 months to see if I like what you're doing? It's like, dude, no, just go lose your other 300 grand. For real. Like, you're an idiot. I can't afford to lose any more money. Stop trading then. You don't know what you're doing. I mean, don't trade. I don't think any new person who joins the LATF should be trading with real money. It's not like you click join and you're magically a professional trader. Take some time, go through the content, do some paper trading. If you want to put $1 on an exchange, collect your own data, right? Deploy the concepts, get disciplined about managing your risk and hone in your execution. Put some effort into becoming a good trader and then put some money at risk, right? But people don't want to put in any effort. They don't want to learn. Many do, but many don't. I mean, many just want to succeed. They want to perform like an expert, perform like a professional with putting in little effort. And, you know, I've made some comments that I think trading is one of the most profitable, well-paying things an individual can do when done well. There's no barrier to entry. You can do it from anywhere in the world. You can build up a small account into a sizable account. But why isn't everybody rich then? So I've said probably trading consistently and profitably is one of the harder things you can do as a career. There's a lot of work that needs to be done. And people have said, no, it's easy. Trading's easy. If it's so easy, then why isn't everybody starts trading at some point or does some form of it? Why isn't everybody worth hundreds of millions of dollars? Because that is the potential of trading. It's so easy. You just click buy. You hit buy and then price goes up and then you make a lot of money. Well, why are most people going to lose money in this bull market? What is going to happen? So you hear all the horror stories of the last bull market. I shorted the whole market, could be a horror story. I longed the bottom of everything and I wrote it all up and I had $1 million in unrealized P&L and it all went to zero. I was long on leverage. I got liquidated right before the big move happened. Why are all the stories at the end of the big bull market that everybody was so pumped about a couple years ago that pretty much everyone just lost all their money? And why is that going to be the same story again? That is just going to be the same story. I mean, not everyone. People are going to make money, of course. But most people, many people, are going to make a lot of money and feel really smart. And then price is going to retrace 20%. And they're going to say, you know what? This is it. The bull market's just getting started. 10x from here. I'm going to go all in with leverage. My liquidation another 20% away. Price will never go down another 20%. They'll go all in and liquidate everything. And that will happen to people over and over. Or they'll rebuy some coin that they weren't in. They made all their money from one trade or one investment. And then they'll say, I'm printing money. Let's go all in on this coin. and that coin will go to zero. Yeah, we have a great, I think the link's in the description. We have a great paper trading platform. It's free to use, that we built. The tradingarena.io, tradingarena.io. It should be a link in the description. If not, there's a link in my Twitter bio. But you can document your trades, collect data, and compete against other traders. In the future, there's going to be competitive rewards for how you perform in seasons. So there'll be like 2 to 3 month seasons. You'll earn tokens for just performance-based paper trading. So we're gonna reward some of that. There's a whole plan for it, but but it's free to use. You link it to a MetaMask wallet. I would say link it. I don't know of any security concerns. But you have to give a permission. You sign in with your MetaMask wallet. Just make it empty. Make a new one. Use a new browser. And that is because when we implement the next phase of things, and you're in a competitive season, you'll get airdrop tokens based on your performance. So it's all built around that. Again, I think doing a lot to the main focus you'll notice in the LATF is a little bit of a longer time horizon of, the market's not going anywhere. There will always be opportunities. Build a solid foundation. Here's some tools that you can grow, learn, practice safely. And for example, we had a member who, he was not doing very well with his trading, and he said, you know what, I'm just going to paper trade for a couple months, and I'm going to implement all these things I'm learning and have learned. And so he went on the trading arena, and for 2 months, I think about around there, he just paper traded and went straight to the top of the leaderboard. He said that built a ton of confidence. Just trading without the fear and anxiety of having a bunch of money at risk in the market really built his confidence, did super well. And then he decided to go into a prop fund and whatever. He passed the challenge, and he got the highest payout that prop fund had ever paid out. And what did he do? He applied himself. He took the time to collect his own data, to do some paper trading, just really focus on execution, trading without fear. What is he capable of when his emotions aren't the driving force of his trading? That built a lot of confidence, and he went and had a massive success. I think he got like a $70,000 payout in a week off of that. So I think it was 67,000, but it was their highest payout in history. And he said, I owe it all to the LATF. He wrote me a really nice message saying that he really appreciates it. And, after just banging his head against the wall, he decided just to take the advice, focus on his own trading, collecting his own data. And we've had some really nice stories. There's also people that, we've had people who literally refuse to do anything that they should be doing. They'll get in there, they'll say, I know, I won't name names. He's not in the Discord anymore, but it's almost comical. But it is sad because people are just getting absolutely wrecked by the market. But ultimately, I don't care what people do, right? Like, I don't care if you want to say, hey, I don't want to use risk management. Hey, I don't want to do this. It's your money. Do whatever you want. I don't care. I can say what I think is a good approach, what I think is a good path, which is, you're a new trader, you're going to lose money, okay? You're not, and how do I know that? Just based on statistics. The statistics are the vast majority of new traders just lose money because they don't have any of the tools, psychological, technical, they don't have the discipline, they are not going to execute their trades well. That's something you have to learn. And so why put a bunch of money at risk when you don't know anything and you're at your most vulnerable? You're going to lose money. So when you're learning those things and you're at your most vulnerable, protect your capital. Maybe join something like the LATF, do some paper trading. Maybe trade with $1 if you want to get used to using an exchange. If you are developing consistency, track your data, then you could start scaling up some risk based on your own performance. Awesome. That's awesome. Lee Howe says, "Hi, Lucky. Speaking of the guy who had the highest payout from a prop firm, I actually just passed my prop firm too, thanks to you." That's awesome. We've had a lot of people actually passing prop firms. You know, prop firms are hard to pass. We also, and I'm not taking the credit. Okay, whatever I've contributed, people have written me thank you messages. They've said I owe it all to the LATF. But I know for a fact that the biggest part is what they did, the work that they put in. And so I think the LATF is a great place to learn those skills because I have data that suggests that. There are people who learn those skills. Not everybody that joins is going to succeed like that. Not everybody is even going to put in any effort, right? They're just going to read my daily updates and say, "Oh, Lucky is longing here, so I'm going to long here." Oh, but they have no idea what I'm talking about, right? And that long term, it's a wasted opportunity, and what you should be focused on doing is developing skills they can take with you for the rest of your life. But prop firms are hard to pass, right? We had another member who passed, I think, 10 straight prop firm challenges. And again, he deserves all the credit for that. I'm just telling you a fact. For over $1 million of funding, I think. And the reason they're hard to pass is because you have to have super strict risk management. The drawdown limits are, so most prop firms are making money because the average person who joins thinks, "Oh, I can pay $1,000, $500, whatever it is, get $200,000 in funding," but no one can pass the challenges because they have none of the skills required to be consistent and control their drawdown. But the skills you learn in the LATF allow you to be consistent and control your drawdown. So passing these, we've had a lot of people I've seen sharing passing challenges because they're developing those skills. An LATF member is a prop firm's worst dream, worst nightmare, because they actually pass the challenges and get paid out. I'm gonna hit you kind of hard here, Martin, and it's nothing personal. You said how much leverage is usually ideal. The question itself tells me that you just should not be trading. You don't understand even the question you're asking. Leverage is an irrelevant factor in a trade. It's all about position size. And how much leverage should you be using? Well, this is going to confuse you, and it should because you have a lot to learn, and that's okay. It's okay to have a lot to learn. I'm just going to be blunt with you. Whether your leverage is 200x or 1x, it's irrelevant, especially if you understand what cross margin is and whatever. But leverage is not a tool to trade more money than you have. What you need to be focused on is your position size and your risk. So if you're long from here and you have a $10,000 trading account and your stop is down here, you long this breakout, this is your $10,000 trading account, your stop's 1% away, and you want to risk 1% of your account, then your position size is $10,000, and if your stop gets hit, you lose 1%. Now, if you have a $10,000 trading account, but you have a $10,000 long position size, so maybe it's $100 on 100x leverage, but your account is $10,000, well, it's the same thing, right? Your leverage is irrelevant. But if you long a $10,000 account at 100x leverage with your margin at $10 and your $10,000 and your position size at $1 million, well, then you're risking 100% of your account on a 1% move. But it's your position size, right? Not your leverage. People say, don't use leverage in this market. What? I could open a 200x leverage trade right here and not get liquidated at $1 per Bitcoin. Leverage is an irrelevant. The reasons you use leverage have nothing to do with your position size. Or you can, just because you can do something, which is oversize a position with leverage, doesn't mean you should. Someone's saying, how much is the Discord group? It's $97 a month. Yeah, I don't know. I think that's pretty reasonable, but I think I've gotten, out of thousands of members, like 3 like really scathing like feedbacks, and they've been from the stupidest things that I've seen. It's like, hey, you just took 3 longs, and yeah, they ran to 5R, but then they all got stopped out the next day. Okay. So they ran to 5R. And I, like I said, I remember this conversation with this guy. It's like, well, yeah, they all ran to TPs and remove risk from it. He's like, obviously you can take profits on them and you can remove your risk. Everyone knows that. But in the end, the trades never went to their final target. Okay. I don't know. I don't know what you want me to do. I never said they were going to go to their final target. You dumbass. Just kidding. But, yeah, I don't know. Overwhelmingly positive, which I don't take for granted. I appreciate all the positivity in the LATF. But there are a lot of people who join. A little bit of just watch as we start ranging here. But there are a lot of people who, like for example, I've made it pretty clear. I'm looking for a breakout to hold an 81K, but we could just break back into the range. I'm in longs from lower, and I'm not round tripping this trade. Now, somebody might interpret that as me saying price is going to 81K, and even if they're long from down here, they just round trip the whole trade, or even take a stop loss. I'm not going to take a stop loss on this trade. That makes 0 sense at this point, right? Could I be willing to hold some of it longer? If we reject from here, I won't have closed my entire position at the top, unfortunately. You know, I'd love to do that with every position. I prefer just to take profits and remove risk. Yeah, but I mean, there are a lot of people who join the LATF that really, I think, are just there for the live updates and don't go through any of the educational materials. And I think that stuff is actually super valuable and super good. And I made it really short and consumable and digestible for a reason. And I think, you know, applying yourself for a little bit, taking that time to go through it is such a great opportunity. And as far as the live updates go, I mean, the reality is I'm not going to do this for the rest of my life, right? So that component of it is going to be, this is a season, right? I think 2024 is a great year to really, really take advantage of that. And you know, I'm not saying that it's all going to end in 2025. I'm just saying, you know, out here going through these concepts every day, giving all these updates, maybe not something I'm going to do forever. But I definitely want to leave a big impact for the time I do that. Yeah. So I'm getting asked to look in the Discord. There's an active traders channel, which is after you're a member, you can join. You can get the active trader role, which is people who are actively day trading, sharing their own ideas, want to share ideas with each other, and have shown that they've gone through or applied themselves to some of this stuff. So we can look at that quickly. Just the 1.272 somebody's pointing out into here. I'm not surprised to be getting reactions from key fibs. I'm not saying there's not scalpable ideas in here. This is the channel being shared. So there's fewer members in this, and you have to request to get access to it. But yeah, just traders sharing different ideas in here. There's also traders sharing ideas in here, but mostly just posting Pepe memes in the general chat. Bitcoin, trading conversations, alt charts. These are members, and then updates from me in here. And then you have all the educational content. A bunch of this stuff. It's almost like a book in this. I don't know if that, I mean, that's kind of what the format is. Lots of charts and examples and write-ups on different concepts and whatever. And then all the live updates. But yeah, so I know there's some fibs here. You pointed out the 1.727. I mean, yeah, somebody's saying, wow, that's a lot of updates. If I search my name in the Discord, there's over 50,000 messages from me. A lot of that's chatting, and a lot of that's live updates, but there's quite a bit of content to go through. But I've been doing this for years, right? So that's over many years. I know there's a level up here, right? I said that earlier, like 71 to 72K. There actually are some really important ideas here, and I'm aware of that. It's just that, and this bias might cost me, and it might have before. I even pulled all my levels off the chart when this wick happened, because I just want to interpret order flow, and I'll be honest, maybe a little too perma bullish. I said I'm just more interested in taking profits on my long on a failed break than I am trying to short. And the reason is with the size that I might trade, I was a little worried that I would get something that was like a really compelling short trigger on this wick. This one a little bit cleaner, and just get absolutely liquidated in a big move. Of course, the way I structure my risk management, even that would not be the end of the world for me, because I use leverage to trade with a smaller amount of capital at risk, and then use my capital leverage to represent more capital, so I don't have to have, who wants to hold a high percentage of their net worth on a deregulated random crypto exchange. So that's how I utilize leverage, which is to hold in a smaller amount of my capital on the exchange, because if these exchanges collapse, like FTX or whatever, I don't want to lose everything. So why not use the leverage to have a small amount of my available capital on the exchange, and I can represent what I want, the size I want to trade with leverage. But anyways, just kind of having a bit of a feeling here that I didn't want to short the initial wick, and would maybe wait for some structure. Of course, we're up here for like 15 seconds. It went straight down and could have been a nice short. And I kind of have the same idea here, although we're getting some structure now. So a little less worried about that. But just shorting a big wick, and then just price runs up because tons of shorts are getting liquidated. And if you've been in this market long enough, you've seen this happen with massive, massive moves in a couple minutes, and there's just no, the fill. I don't like a stop. That's where your stop losses don't trigger. So, but I know there's a level around 71 to 72K, and no wick on this 4-hour candle either. Probably come back and retest these lows. But I'm just not going to short it, because we're breaking out of all-time highs, and I'm pretty confident that I'll be able to get into a clean short in the same way that it doesn't really matter if we do break down. That I don't really care if I didn't have a long anywhere in here. I can just find the long setup, and I found many long setups on all of these. I'll find the short setups that I think are compelling. So here is just kind of hoping for a rejection. It's a scalpable. There's a lot of liquidity. You can structure trades here. I'm not saying you can't. I mean, if we did just have another huge rejection, the risk reward on these trades is just massive, but you're shorting a breakout. So you basically say, is it worth a 20 to 1, short here to take that risk? 20 to 1 payout. And it has to be pretty unlikely that it won't work for that to not be a good trade to take. Even if it's a 10% chance or a 20% chance, the risk reward's still there. But you also have to balance that with the fact that what is the trigger here? You know, I would hope for maybe you come and get a retest, signs of bearish absorption here, and then maybe I would consider shorting or a sweep of this wick, right? And that could be a nice trigger. If I don't get that, I'm fine to miss the short. Well, I'm not laughing at the question. I mean, it is a funny question, but it's not an invalid question. So somebody says, a lot of people say to trade the 1 minute chart to be profitable. What do you say about that? It doesn't matter what time frame you're trading. If you don't know what you're doing, trading a different time frame isn't going to make you profitable. My view of the market is that the market is fractal, so you can trade the same. I mean, I could start charting all of this, and I bet you I could have a pretty high hit rate on scalping this 1 minute chart with key levels. Get a sense of structure and all that stuff. Now, nice point of control developing here as well. But the point is, if you think that trading the daily chart is tough and you can't be profitable, you're not profitable trading the daily time frame or the 4-hour time frame. Trading the 1 minute chart, all of the things that make you unable to trade the daily chart are just going to be compounded by 100, right? Or by some big factor. You'll have less time to make a decision, less time to structure your trades, less time to execute, and you'll be taking many trades very quickly. And so if you're not a profitable trader, you're just going to lose money really fast. Can trading the 1 minute chart be very profitable? Yes, of course, but you have to learn how to do it. You have to know what you're doing. It's, scalping the 1 minute chart is every decision, whether you're cutting a trade, entering a trade, taking profits, is taken instantly. There's no room for hesitation, or the trade's gone, or the trade's round tripped. And so do I scalp the 1 minute chart? Yeah, I mean, I've scalped the 15-second chart on exchanges. I've taken hundreds of trades on Bitcoin in a day, and people wondering, I was using an exchange that doesn't make you pay fees on market entries. And so I was testing that out, right? But does that mean that that's what you should go do, is to go trade the 15-second chart? No. You probably shouldn't trade any chart or time frame if you don't already have consistency. So let's just say this should be common sense, but if you're wanting to learn how to trade the 1 minute chart, you wouldn't say, well, I think the 1 minute chart is where I'll be profitable, and then go into the market with all your capital and start just trying to trade the 1 minute chart and take 100 trades in one day and then blow up your account. What you would do is you would say, I'm going to learn a system, a strategy, and I'm going to build experience trading the 1 minute chart with paper trading. I'm going to collect data. And I've been asked this exact question where someone says, what risk should I do when I'm scalping low time frames because I find that I'm just losing all the time? Well, I'm like, no risk. You're losing all the time. Collect some data. It takes almost, if you want to learn how to scalp, I mean, I do this. If I'm testing something, I'll put on, I literally thousands of trades with very little capital at risk, especially scalping, and build my own data and go look at my data and understand how I should be trading that. But I'm not going to ask somebody, hey, I've never done this before. How much of my money should I be risking? If I'm scalping the 15-second chart, it's like, well, maybe I should go learn how to do it and put in some work and collect some data. It takes almost no time at all to acquire a ton of data trading that time frame. And unfortunately, that's just the reality, is that how much should you risk? Nothing. You should risk some, based on your own data is how you should define your risk, not based on my data. So if you see somebody who says, hey, here's me scalping the 1 minute chart, and these are my results, that doesn't mean those are going to be your results, right? Because you're different people with different skill sets. Yeah. You're saying not using real money, though, on TradingView to learn? Yeah, or you could use our paper trading platform, tradingarena.io. But exactly. You can trade with fake money. And wouldn't that make sense? I like to liken it to somebody wants to become a heart surgeon. And they might learn some things in a book. They might do some mock practice surgeries. I don't think this is that relevant, by the way. So they might take some of that, and then eventually they might perform open heart surgery. But you get the equivalent in this market of people saying something like, I can't learn with a practice heart surgeon dummy. The way I learn is I need to have a lot of risk so I can actually absorb the lessons, and I need to have that stress and emotion. So I need to do my first heart surgery on day one on a live patient. Because that's how I learn. Oh, you just killed the patient. Yeah, but that actually is the best way for me to learn, because I had all that stress and emotion, so I really took a lot away from that. I'm gonna need a new patient, and that's how people treat their capital. The best way for me to learn how to trade this 1 minute time frame is to go all in with all of my capital at a 100x leverage of margin. This is gonna help me learn here. Oh shit, I just got liquidated. Well, I wouldn't have learned anything if I didn't do that. That was a joke, by the way. I was pretending to be somebody who was learning. Well, Bitcoin's pretty bullish. I think I need to long here. That would be a good scalp, right? Because we have this 1 minute. I better put the rest of my, I'll put the rest of my, we have support here. I'm long. Come on, dear God, don't liquidate me again. No. I mean, that's what people do, right? And they say, oh my God, scalping. I always lose money when I scalp. Well, you're just basically trading nothing here, right? There's no idea. I mean, there actually is kind of a point of control short idea, frankly, but I wouldn't take it. But let structure form. So personally, I don't like scalping an all-time high breakout with low time frame structure forming up here. Wait for some of it to be tested, and I would start looking to scalp around some of that. We can notice though there is a point of control forming here, price consolidating under it. Definitely signs of some limit selling coming in here. We can look at order flow really quick too. Yeah, so there are signs of bearish absorption here, but there's some context locally, which is right here, this $11.8 million in positive delta that popped into this level gave us a sign that there's a limit seller right here. This was the first sign, and this is a lot actually to have absorbed, so it's a bigger limit seller. There are also signs of those sellers in here, but this gave us a bearish divergence in order flow. So something to watch here locally. I mean, if you're scalping, you could pay attention, but there's some more context here. So that liquidity hasn't been, this trader hasn't been tested that many times, but this, I mean, 11.5 million delta right into this level, that's quite a bit, completely absorbed. But we have a negative 7 million delta here that is now absorbed at the lows of this range. So there actually there's probably a big short opening here with the increase in open interest at market. And we have some more selling coming into here, and that's being absorbed too. So, I mean, this kind of becomes a little ambiguous, but this could be the same trader selling off a long and then opening a short, limit selling. But this is kind of a little bit bearish locally, but this is also a little bit bullish. And it kind of makes sense when you look at the price action that there's clearly, and there's not always something super determinative to take from order flow, but as we form a range here, there's a limit seller here, and there's a limit buyer here, which is why we're forming a range. And they've taken on some big size. Like we just had a pretty big short open on this wick, 7 million, get absorbed. And so what's going to happen is, well, probably see that get squeezed, right? Because this guy here, 7 million negative delta increase in open interest, got absorbed. And now he's getting put under pressure, so price can pop here, and we could maybe see that get squeezed out. So at the beginning of this live stream, I explained that I'm going to try to short the all-time high of FET. Of course, you should note that I don't know if I'm going to short the all-time high of FET. I've shorted the all-time high of mini coins in the past, but I've also got stopped out. And of course, it looks like a great trade when it works, and it looks like the dumbest trade in the world when it doesn't, when you're shorting a all-time high, because I have some tools that can help me do that with high probability. But at the end of the day, I'm just taking a trade, and it'll either work or it won't. I'll take a stop loss or I won't, right? And I'll be trading around levels I think are important, but that also means if they break, they're important, right? If they break out, they're important. If they break down, they're important. And so it's kind of like trading around a crossroads with tight invalidation. And I'm going to have a little fun with it. It's not that I don't think the trade is valid by any means. I really do think it is a valid setup. It's a little ambitious. I'm going to probably look to short it aggressively, and by aggressive I don't mean size, I mean my entry trigger. But it's just a trade. And I mean, and there's nothing wrong with this. Like people would say, well, why short FET at all? It's one of the strongest coins there is, and I agree. But the point is, I agree with the concept, right? The point is, I haven't been shorting FET from here. I took one short on FET near, where was that short? Oh yeah, it was here. I took a short on FET in here, and I cut it at a 0.5 hour win, because I didn't want to hold it on any strength in a breakout. No, it was here. And we just got a little dip. I took a teeny short, and I said, I'm just trading this as a scalp, and I'm already willing to remove the risk. And I took a short here on FET. Those are the only two times I think I've shorted FET, and that's it. So I'm not going to short FET every day as it just goes up. I'm going to short key levels. And so I've shorted the strongest coin before at a key level. Doesn't mean I look every day for what coin is going up and is the strongest and I'm going to short it. I'm marking out levels and I'm shorting the level. If it happens to be the strongest coin of the week or the day, so be it. I'll take a trade off a level. I shorted famously the all-time high of Luna. And I said, hey, everybody wants a short from the all-time high, but nobody wants to short the all-time high. I had literally a dollar level marked out from 3 months ago. And of course, on the day I'm shorting Luna, it looks like the stupidest short in the world, but I've had the level on my chart for 3 months and almost the identical price action that it took to get there. And so I got a local trigger and I took it, and it was the all-time high. Same thing with GMT. the day I was shorting the all-time high of GMT, everyone's like, dude, do you even know what you're doing? GMT is going to $500 because they had just released their sneakers. And I'm like, I literally don't know what you're talking about. It has nothing to do with what I'm shorting. I'm just shorting a level with invalidation. And GMT, of course, ended up going straight down. Well, I'll just say this. Let's pull up GMT and Luna. It's actually, the reason I take these trades is they don't even have to be high win rate to be some of the highest EV trades that I've ever taken. And the point is, like I shorted GMT on the all-time high right up into this ascending structure, and I think my short was $14.14 or 15 cents right up here as we wicked up into that level. We had some nice local structure as well. Of course, it looks like the dumbest short in the world at the time, but the worst case scenario for me is I take a small stop loss because I have tight invalidation. I'm not even going to be able to get back there on the 30-minute chart. And of course, from there, this is the GMT chart. I was the biggest idiot in the world for shorting this. I'm risking a tiny stop loss. It's EV positive, and it's the same structure that I shorted on Luna. It is my Luna short. This is a short I was looking for on Luna from down here. I actually called this, I had an Elliott wave count, and I said, is the low end for Luna looking for a push up to $118, $119? And of course I'm an idiot shorting here, right? But I would look at like an idiot if price stopped out, but I was fine getting stopped out because I've had this level on my chart for months with the idea of price rallying into this, forming a channel. There's a lot of other confluence at the time. And so that's what people need. The same thing with Tesla. The Tesla trade is the exact same structure. And there are two structures on FET that are similar. And the point is they could break out. I'm willing to trade them, right? But that's it. That's it. I'll take a stop. I'm fine. I've shorted. I take this trade all the time. I look at all assets as the same. People say FET is nothing like GMT when it was the hottest coin going straight up into this channel. That's different because FET is AI and they're having a conference. Well, that's nothing like Luna. You know, Luna, there wasn't that much hype at all-time highs around Luna as there is around FET. It's very different to short the all-time high of, or they could say it about Tesla. Exact same structure. But there are also times the structure doesn't work. But could you see why I might be interested in taking a short with invalidation on those structures? Or a long? It's also the all-time low of Sol. It's the all-time low, or the major low at like $8 of ARB, which I longed. I also took longs off those structures. And they look so stupid when they don't work, but I just get a little stop loss. And it's the Pico low of the bear market when they do. And so that's the risk reward of the setup. And it is shockingly consistent for how hard it is to trade all-time highs and all-time lows. Again, INJ, same structure on the log. Had this structure pointed out up here. This structure is really important. We've hit it 3 times now. We haven't broken it. It's not to say that it will, but we not break. But we've had some major rejections from it. Just super clean parallel structure. And we'll look at Tesla really quick because that one was awesome too. So that's all I'm trying to say is I'm shorting for a reason. And the reason is if I short 1,000 of these, I'm going to make a shit ton more money than I will lose. based on how consistent they are. Of course, not hard to see this nice clean parallel structure on Tesla going to the downside, but let's look at all-time highs. Posted it on the day. This was the all-time high of Tesla. Of course, selling into that, you look like an idiot. But I posted this channel right there. Anyways, these are super important structures, and that's why I'm looking at it on Phil. Now, I have zero idea if price is going to reject, or not Phil, FET, what am I saying? If price is going to reject from that structure or not. And it's already kind of wicking through it. But it's a structure I am watching both locally and on the log scale. And there's two of them. The bigger one would be up here. I have an alert set on that as well. I'm keeping an eye on Bitcoin. We're about to push up. I'm going to go back to order flow here in a second. I have two computers pulled up. But I just want to say that I don't just use those to short. This channel's been moved. We're gonna have to go back to Bitcoin. This is a perfect channel. There's two channels here. Fugger. I was actually confused there. I'm like, this is, but it was on log because I was on FET. Anyways, it's the same thing in reverse, which is why I longed. And there was actually two descending structures intertwining there, but longing arb off that same structure. All right, so we can take a look here. This is a kind of a key idea locally. Then I might get off the live stream. Got a long day of trading ahead, theoretically. Which is absorption here, a short getting squeezed out, and more selling into this high. Again, I'm not shorting anything up here. I'm looking for a break back into the range below or much higher, 81K. If anything changes in order flow, I might change my perspective, but for now, I'm not. But, you know, people think that it takes balls to short an all-time high or balls to long an all-time low. I mean, it really doesn't. It just takes a system and risk management. I literally don't care if the trade works or not. It's irrelevant to me. I don't know if it's going to work. Sometimes those structures hold, sometimes they don't. They just give me great setups with great risk management or risk reward. Someone says, will you ever share that method in the LATF? Well, I have. If you go through the educational content, there is breakdowns of all of these things, and obviously I use them in my trading. But the thing that sucks is, like, this mostly happens on Twitter, not so much in the LATF. Somebody will come in, and I'll be sharing a live update, like, hey, I'm shorting here for this reason. They haven't looked at all the documentation you have on this idea, and that you're 100% saying you don't know what's going to happen. You're going to stop out here and trade down to here, or stop down here, trade up to here, based on these concepts. And they'll just say, what the fuck are you doing? You just shorted and then price went higher. You just longed and then price went lower. It's like, yeah, that trade didn't work. I mean, who's claiming to have a 100% hit rate? Who wants a 100% hit rate? There's so many trades that are great setups, traded with risk management, that you know don't have a, they're not, they might have a 20%, 30% hit rate, or somewhere about there. I mean, every moment in the market's different, but they're so worth trading because they pay you 20 to 1. And so saying that you would only want to take trades that are close to 100% hit rate is like me saying, hey, I'm going to let you bet on this quarter, and it lands on heads 30% of the time, and I'll give you $10,000 every time it lands on heads, but it lands on tails 70% of the time, and you have to give me $1. And you say, no, I'm not playing your stupid 30% win rate game. I only play 100% win rate games. You're not thinking about the risk reward of the payoff, right? So would you take a 30% chance at $10,000 risking $1? Of course. And that's the risk reward of the flip. Even if it's only a 30% chance you win, you just have low risk, high reward. And so you might take a setup that you don't necessarily think is the highest probability. It might even not come out 50%. You could have systems that are probably higher probability trades, but why would you overlook the really nice setups that are lower win rate but super high risk reward when you could trade those systems as well? So anyways, it's all complicated stuff, math and whatever. For a trader, I'm going to end this pretty quick. A little bit of bullish absorption as we start squeezing out some shorts. For a trader who focuses on volume, should he use spot or futures charts? Well, I mean, there's different ways to apply the volume on both. There's probably not like one answer, but one thing that you want to be looking for on futures charts, and one thing that has a big driving force on price, is people getting liquidated, right? And stops run, like high leverage traders. There's a lot of leverage in this market. So, for example, through the weekend, I'm looking for this, even though I'm bullish on Bitcoin and I'm looking for higher, I'm looking for a big liquidity wipe before the move out, and so that's where the volume can be really good to watch, like these high volume wicks on these all these leverage traders getting stopped out, and you'll notice that trading around these high volume wicks, a lot of times these are, again, that's actually why I flip bullish here into all-time highs, is because with this really high volume wick, we had a ton of longs stopped out, and you don't know how much liquidity is there until the wick comes and you see the volume and you can look at the order flow and you say, oh, this is actually quite bullish, and so I'm going to long the retest here. So I long there, and then I put on some more longs. But again, looking for that volume, it can make a lot of sense if you're utilizing it that way. There's other ways to use volume and that sort of thing, but it just depends what you're using it for, what on spot or whatever. What you're trying to infer from it, rather. All right, listen, let's end this live stream. We'll maybe give price a little bit of chance to break out, but I don't even know. It just doesn't really matter. We're going to form some local structure here. People going to get wrecked one way or the other. Probably some volatility. Yeah, probably not a lot of people are finding longs into that move like today before it happened, but happy to be in some longs. I could have longed this wick. That was my setup, but unfortunately sleep. So I'm along from a little higher, but all right. Well, peace out, everyone. Hope it was fun.